Yeah! Turn me up! Yeah! All right. Let's get on with it. Welcome. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. We gather here today for technical and fundamental analysis to put together trade plans throughout this beautiful Thursday. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please, stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, whoa. Yeah, I'm trying to deal with these back problems of just trading too much. I sit in my chair too much, man. So I'm trying this for now. So, hey, good morning. My name is Wayne McDonald. I love trading currencies, especially when pips are raining from the sky, finally. So anyways, cool. So yeah, we will do some technical analysis today. Bank of England raised interest rates. Yep. Yeah, made us back in the swing trading group. Cool. Hey, everybody, if you're in the swing trading group, we're going to meet today. Yeah, we're going to meet in the swing trading group tonight, the same normal time, 4 p.m. Very cool. So make sure you're hooked up to the new website. I've sent out a bajillion emails, so try to get on the clue train. And if you, for some reason, are a member and you haven't received an email, I don't know why, but email me, wayne@fxbootcamp.com. Okay. Cool. Anyway, so yes. Oh, Alexander says, Wayne, I'm in the swing trading group, but I don't have access to the swinger on the new site. So, but you have access to what? You log in and then what, Alec or Alexander? What do you have access to? Tell me what you do have access to. Anyways, ask questions, get involved, take notes. I am here to share from my 20 years of experience trading Forex. Okay. Cool. So anyways, yeah. The videos. All right. Well, we'll have to double check. We'll have to see when you join the swing trading group and find out how you got on the wrong list. But yeah, email me, wayne@fxbootcamp.com. Yeah, Chad, if you only have video access to the videos, email me, wayne@fxbootcamp.com. All right, so today we'll take a look at the pound. Pound is doing well. We had the Fed meeting yesterday, Bank of England today. It's all good. Your camera's too low. I know, Adam, it's just because my back is sore. I've been sitting in my chair way too long. My hip is blown out, and I've worn the skin off my tailbone. My right shoulder where I hold my mouse is just shot. I'm a mess, dude. Adam, I'm a disaster. But a little bit richer today than I was yesterday, so I got a lot to be thankful for. So anyways, guys, you need a broker. If you're a foreign exchange trader, you're going to need a broker. Tradersway.com has earned my loyalty and respect. Would you please give them an opportunity to earn your loyalty and respect? You do that by visiting Tradersway.com and opening up a demo account. If you play some trades, you'll find that there's lots of goodness. Fast execution speed, for example. Low fees, for example. And if you're trading exotics, high swap fees. So it's all good, right? Hope says I've been playing too many video games. Actually, I did buy Far Cry 6 a year early, got the collector's edition, and have played it maybe once in the last 5 weeks. So, I wish. Anyway, so tradersway.com, let's go, man. Let's go. We're waiting for you. Join the family. Okay, wasabi! Yeah, got to get you some Tai Chi. Yeah, sure. Okay. So we'll take a look at here. Milo says, can we interpret the Bank of England move as an additional nod to risk on environment? Or was the move because of their inflation and employment data? What's the difference? I'm not seeing how, I don't know what you mean. Okay. Does wonder for the joints. Oh, for sure. Some yoga and stuff. Yeah. All right, so anyways, Bank of England has raised their interest rates from 0 to 0.25, and you can read their monetary policy statement here. Yes, their employment level and inflation level has pushed them to do that. Now, why didn't they do it last time? Why didn't they do it last month? Everyone thought they were going to, and now they did it now. Like, why would you do that? And maybe they were waiting for permission, so to speak, or at least collaboration, if you will, with the Fed. And the Fed wasn't ready then, but then suddenly something changed more recently. And the Fed changed their tone and maybe gave the thumbs up to the Bank of England. It's one way of looking at it. Today, the Governing Council judges that the progress of economic recovery and towards its medium-term inflation target permits a step-by-step reduction in the pace of asset purchases over coming quarters. Okay? Smells like a taper. But monetary accommodation is still needed, for inflation to stabilize at the 2% inflation target. Okay, now what's going on here? Why is everybody on the planet worried about inflation and the ECB is not? Sure is, Darko. Come on, guys. What's the deal here? Why not get a standing desk? Well, because I have a very, 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 very expensive mahogany desk, and I don't want to get rid of it because it's very, 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 very expensive. You should have seen my wife, though, the day I bought it. We bring it home. It took like 5 movers to get it into the office and everything. And then she hears a drill going, and she walked in to see what I was doing, and I was drilling holes through the top. And it's thick. It's like 2 inches thick mahogany. And of course I was drilling holes so I can tap in my screen arrays. Okay? Hope says they need. Why don't they have the inflation that everyone else is drowning in? Because it's old? Well, Canada's old. America's old. Okay? I want you to think. Come on. How do you get the honey from the honey pot? Think, Pooh Bear. Thinking makes Pooh Bear hungry. Trying to learn. No, but why don't they have it? Not what they're trying to do. Why can't they get inflation? Adam says they've claimed it's transitory. Beyond that. Look, this is the only central bank on the planet that says we don't have enough inflation. Not enough exports. Okay? Well, exporting would increase the value, but you're on the right track, Jim. If they're exporting more BMWs, then car dealers in America, for example, need to buy more euro to place more orders. Omicron? No, everyone else has Omicron. Ruled by socialist pig dogs? Maybe, but there's a right? No $1 trillion spending. Okay, you guys aren't thinking it through, but let me stop you there. But thank you for all the guesses. If the dollar weakens as expected, what's going to happen to the euro? Yeah, Cisco's got it right off the bat. Cisco nails it. Euro's going to go up. Americans are going to start buying more BMWs if they can get them. Okay? They're going to start investing into European stocks because they're cheaper. But also, according to the Bureau of International Settlements, the last time I looked, and it might not be completely accurate, but generally still accurate, 40% of the dollar play is against the euro just because it's sort of the anti-dollar. So if the dollar does weaken, the euro is going to strengthen. And if the euro strengthens, that's deflationary. Okay. By the way, before the 2008 crisis, Europe contributed to 30% of global GDP. Then it dropped down to 20, and now it's back to 25. So there's a lot of economic activity still, potential in Europe. Think of it as actual GDP versus potential GDP. Okay, if you're thinking about sort of like business cycles, for example. Okay, this is kind of what they're saying. I'm waiting for my drawing tool. Hang on, there it is. Okay, so what the ECB is kind of saying in here is this is your potential GDP, Y star, which is nominal GDP, and that they're in this business cycle, and they're still saying they need accommodation, low interest rates, and even some stimulus here to get to even the 2% target. So they're telling us Europe is here. And they want to get here. Okay? So this is Y, and that's Y star. And there's still a productivity gap. Okay? And so that's about, I don't know, a year behind the United States. Okay? Femobig says, hey, European exports will fall. Yeah, well, it'll be interesting if I start driving my Neo around. I'm like, wow, you still drive Teslas? That's weird. Well, this is my Neo. It smiles at me. Have you ever seen a Neo? A Neo? You get in, you turn the car on, and it smiles at you. A little face opens up. Good morning, Wayne. Ni hao, Wayne! Okay. I have a laser projector. Okay, a 4K laser projector. It sits at the front of my movie theater. It doesn't sit behind up on the ceiling throwing out light because you want a dark movie theater, right? So why would you want a big bright light above you? And the light is loud because there's a fan on. Why is there a fan? Well, because it gets hot. So you got this light bulb. It lights up your whole theater. The fans are loud, but you're trying to hear the damn movie, and you got a 7.1 or a 10.1 sound system. Why would you want to hear a fan above you all movie, right? So that's so ancient technology. So I think it was like 3 years ago I bought a laser projector. Okay, a Xiaomi. Sits at the front of the movie theater, perfectly quiet, doesn't need a fan. And it only sits 1 foot away from the theater, or from the screen. And it's 110 inches diagonal, 4K, laser. And it sits at the front of the movie theater so that the movie theater stays dark and quiet. I bought it 3 years ago from out of China. And the technology still isn't in America unless you want to spend $10,000 on a projector. I'm like, dude, I bought that in China years ago. Like, it's so, like, China's so advanced, right? So just wait, man, just wait. The better tech is out there. I still laugh at people that spend $1,000 on an iPhone, and I can get a phone from China that just as good, if not better, for, you know, $250. And then people are like, yeah, but it's crap. It's going to break in a year. Yeah, next year I'll get a one even better than your $1,000 iPhone. I'll get another one next year because I can afford it. Okay, so it's just really interesting where the U.S. has been behind in new intellectual property for quite a few years now. Okay, that's where the entrepreneurialism truly is right now. And so I think America needs to invest into that entrepreneurialism again, for sure. Hopefully quickly, right? Okay. Anyways, neat. So everyone in the world is drowning in inflation except Europe. All right, cool. All right, so pound is up on the positive news. Euro's up. Kiwi is up. Aussie's up. CAD was up and now is giving a little bit back. Okay, Swissy down, dollar down, yen down. Risk on, baby! Yeah, boy! Yeah. Yen, how low can you go? Death row! Yeah. So anyways, all good, man. All good. Let's check out commodities first and do Bitcoin and all that kind of stuff. All right, so let me mark this up. Okay. Okay. Okay, so anyways, that's the trend we have been in. We were at 86, I think it was, and we were saying 60-ish. Got to 63. Then we got to this point of some sort of stabilization. Now we're on top of this and trapped inside of there. Okay, cool. So typically what you would expect after like last night's move by the Fed, you would expect up. Now it didn't go very far up because now we're trapped in this lower high scenario, but you know, 75 seems pretty reasonable to me in a risk-on world. Because a risk-on world, it's a risk-on world. Okay, in a risk-on world, that would increase demand. That's what risk-on means, increase in demand. So it's part of the demand side economics. Okay, so if you were going to try to draw that, okay, price, quantity, okay, of oil, okay, so you'd get this D1, supply 1, okay, Q equilibrium, P equilibrium, okay, And so in a risk-on world, right, demand will increase to D2. Okay? And that would change things. Okay, it's not a shift along the demand curve, but a shift of the demand curve. So now then you get to P2 and quantity 2, which means quantity demanded increased and the price therefore has increased. And supply is relatively stable. It's hard to create new oil, for example. We got a supply shock not long ago when the government increased supply by dipping into the Strategic Petroleum Reserve and dumping that oil into the market. That's now a shift again in quantity to Q3. Supply 2 gets you to quantity 3, so there's even, right? Whatever, and then this way, and then it becomes indeterminate. And let's just say I don't like it when the government gets involved. If oil prices are too high, then entrepreneurs will develop a way to suck more oil out of the ground or lower prices. And that's what you want to do. Spur on entrepreneurialism. Or, of course, if oil prices are too high, an entrepreneur might say, well, we have a new way to get more oil out of the same hole in the ground, or we can find more oil and get it out of the ground, or we can give you a better alternative to oil. If oil prices are too high, right? Then an entrepreneur can come along and find something that does something very similar in a different way and give you an alternative. So you're like, wait, I hate oil, it's the end of the world. Well, great, but still, an entrepreneur has to come in and say, well, here's something different, right? Here's a battery that can get you 200 miles in a medium-sized car, and I found a way to do it at half the price or half the weight or half the whatever, and now more people can afford an electric vehicle. Okay? Cool. So I wanted to go here. I don't know why I switched off, just sort of habitual. Take a look at Biddy. Stabilized right on the line, man. I'm going to change the PIVs here. It's a different world. It's a different world from where you come from. Okay, so that we are still on the projected low for the month of December for Biddy. We're still on the fair market value for Biddy. Okay. Okay, just sitting there. And it's really, the only way you can interpret this now is through your bias. So once again, this says not up, not down. So now it's your belief system. For example, if you're a bull, you think it's going to do that. If it's a bear, you think it could come back down to 30. Okay? And even if it goes up, if you're a bear, you're going to think, well, you're going to sell it off here and bring it back down, head and shoulders, or whatever. But right now, all of that is opinion. What this says is fair market value. And it doesn't put you long, it doesn't put you short. You want to think about it like in sort of just a pure technical world, it's like a 50-50. It's just as likely to fall as to go up. But then you walk into this, you're like, but I'm a bull and I think we're going to 100,000. Well, then now you're filtering the statistics and leaning it towards your opinion. And you might have a rational opinion, but that's not what the chart says. Chart doesn't say 100,000. Okay? That's right, Robin. So Robin says, how could Europe get inflation if the dollar is going to push them up? The only option is to bring in your energy prices. So about three years ago, I guess, right before COVID, I suggested that the ECB, instead of doing quantitative easing, they should buy oil. Okay. Right? Or bail out China. One way or the other. Let's look at gold, and gold stabilizing inside of our range. Okay. Look at that, huh? Look at that. EU forces very costly green energy. Yes. Europe has made really ridiculous decisions in regards to its energy security. They once had an opportunity to do an oil and gas deal with Nigeria. Okay? And this would give them near, if not total, independence from Russian pipelines, because at the time they were trying to find a way to cut the pipelines to Russia because they didn't trust Russia at all. See, Russia could just turn off the gas and all of Western Europe is screwed. So they're like, wow, we need some independence from this risk. It's a real risk. So they looked for alternatives. And there was a thought about getting Nigerian oil and gas and maybe building a pipeline. Okay? That kind of thing. And what they said was it would be unfair to Africans to pay them less money, the workers actually doing the work, paying them less than a European worker. But Europeans couldn't afford to pay Nigerians the same wages as a European. So then they're like, so we won't do the deal. It's so ridiculous. The thought process is so ridiculous. It's disturbing, in fact. The whole point of global trade is for Europe, lower costs, and for Nigeria to increase revenue and standard of living slowly. But no one in their right mind would expect Nigeria, if you look at their per capita GDP, to earn a European wage. So to then not pay them Nigerian wages and increasing Nigerian wages, because you don't just hire random people on the street of Lagos to go in and like, hey man, do you want to work in the oil industry? Put those potatoes down. Let's go. Right? So like, it's just staggering to me how ridiculous that was. And then the Americans said, wow, you're not going to do it? We're going to do it. So the Americans rolled right in and built a strategic command right there off the coast of Nigeria. So that and by the way, Nigeria has the most beautiful oil in the world. It's so beautiful. Their wonderfully light, sweet crude is so fantastic. So anyways, Europe said, nah, it wouldn't be fair to the Africans to actually pay them money to give us energy independence. So instead, we'll just deal with the Russians. It's so like ridiculous, but it happened. Okay. And then, of course, the Chinese moved into other places and started buying all the dirty oil. So remember Darfur? Yeah, everyone banned, business ties and relationships with Darfur. Chinese went in and said, hey, oil is trading at $80 a barrel. We'll give you 30. And of course, right? People there said, well, okay. Okay, so anyways, sorry about the bitchiness. I'll move on. So there's that. Let's do some dollar pairs. Okay. Oh, look. Cool. Okay. Does anyone in the day trading group remember the Fed decision came out, Aussie dollar fell, I drew this pink line and stopped the entire market from falling? Does anyone remember that one? How funny is that, huh? Yeah. Cool. You're welcome, by the way. Yeah, I did that. That was me. Yeah. Yeah, you can thank me later. I made this whole market move, huh? Cool. So anyways, and so we need to start looking, right, for next week. Once again, everybody in my swing trading group, we are meeting today in the swing trading room in the new website. I've sent multiple emails. If you're not on the clue train, email me, wayne@fxbootcamp.com. Okay? We are meeting today. Even though I didn't promise you we would, I am. We're going to. So please, swing traders, check your email. Get involved. Okay? You're most likely going to need to request a new password from the system to log in. So when you try to log in, it says password, username or password incorrect, and there's a little link at the bottom that says request, password. Yeah, do that. Okay, you'll get a link, you'll change your password, you're in like Flint. Okay. Cool beans, dude. So anyways, we got to start dealing with the higher high, higher low. The swing trade we talked about on Sunday, the plan is still take it up to 72 3/4, but maybe 73-ish. Okay. Obviously, we got a lot of pressure up here, so do what you think is right. Either target the R1 or R2. Okay. Okay. This one's actually quite a bit neutral, which is different from many of the other pairs. Okay, it's kind of interesting. Okay, there's a bottom there, let's say, and then there's sort of a top here, huh? So, yeah, that's different from the others. Okay. But I'm wondering if that will change on the medium term, meaning in the next 6 months. Could be very interesting. Okay. It's less interesting now, but, trends come and go, right? So it's not maybe the best now, but it might be better later. Check this out. Okay. Check this out. Isn't that interesting? Okay. The swing top projects down to the bottom, huh? Isn't that interesting? Pretty amazing, right? Now, what else do we know here? Like, look at how often we played off a lot of these prices. So, I like the fact that this market is trading with pivot points. Okay? Now, the target here is actually a bit unclear because if we hit this on a Monday or something, we'd only be coming back here. And this is not a technical move per se. This is a fundamental move. So there's nothing that says this has to go to the top. Okay? Like if you were targeting here, your entry would have been here. Instead, this was the counter move and then back, but this is not technical, it's fundamental. So this could go up or there could be an exhaustion and all that kind of stuff. That's why you need to start worrying about Monday's trades today, and that's why the swing trading group meets on Thursdays. We need to set Monday's trade up now. Okay. This is a little different, but still, okay, because this projects that technically, but now we have this higher high, and it's just not really above that old resistance. So, once again, the big move has occurred. I don't know if you can keep buying this. I mean, right? I don't know if you can keep buying this. It's at resistance. And, let me back this out a little bit. If you look at it this way, okay, this is, right? You see? That's a real problem. So I don't think you could buy it here. You should have bought it low, of course. See, one of the things you learn right away, I think it's in the first lesson for day trading, is I say you live inside of the wicks. Okay? And you have to understand how these candles form to understand what I mean by live inside of the wicks. But that's beautiful in there. But now we're up here, so buying isn't good, and selling is kind of, you could, obviously. You'd have to be a bear, and your whole point, if you were going to sell, really should take it all the way back down to 31.50, right? So anyway, so do what you got to do. We're through the daily 21, but not to the 55. And we might actually get this 21.55 cross on the 4 hour to happen. And check this out. We're back at fair market value. Okay? Joseph says it's still bearish. Well, no, I wouldn't say. That's not what this chart says. Now, you're saying the daily chart, yes. But remember, okay? Remember, this doesn't talk about the Bank of England. Okay? So it's backward looking. It's technical. So it could be true. Technically it's still bearish, but fundamentally it may be quite different, at least in the, right? As all these central banks around the world are adjusting. Okay? But for those that did really well today on the pound, don't be shocked if there's some profit taking, right? Isn't that what this chart says? Okay, this is the zone in which you're supposed to take profit, right? And this is the fair market value in which you're supposed to take profit. So what are you going to do? Okay. Okay. Make sure you know how long you intend to hold this trade. Looking at our yens. Okay. We were blessed this week with fantastic swing trades. Absolutely fantastic. This is a swing that predicts that. So according to this chart, not opinion, there's approximately 100 more pips on Aussie yen. How much are your courses? They're very cheap. Okay. In fact, I'm going to make them ridiculously cheap coming up. Okay. Hey, Rose, what do you think is a fair price if it was 55 hours of training? What do you think a fair price would be? 55 hours. Thank you, Hope. So anyway, Kiwi, once again, if you see this, let me zoom in. Okay, if you zoom in, this is our swing trades. Okay, this is, let me use this tool here. This is the buy zone, and this is the target for this week. Cool, right? Yeah, white's like same price. Yeah. Nathan paid $5,500. Yeah. All right, so that's cool. I was just reading the chat there. Oh, let's go to another one. That's Kiwi. Let me squeeze that back. Okay, pound. The swing trade this week was buy down here and target here. We're already through the weekly swing. Yeah. And by the way, Nathan didn't pay $5,500. He paid $500. That's fair. Rose said she'd pay $350. Cool. Okay. Looking at euro, the swing trade of the week was buy here, target here. Oh, look, we nailed it. That one's perfect. Yep. Now, remind yourself that we plan these on Thursdays. Michael says, too late in the week for a counter trend. No, not at all. But it's not a trend, it's a fade, right? Oh, what do gurus charge? What do they charge? What do they charge? It's a fair price. Yeah, more than fair. I'm ridiculous. All right. And this is the weird one. I sold this. Because at the time we were in a bearish market. I think I sold it here. And then the Fed news came out and I bought all the yens, but I was short this one. And I took I think it was negative 1.09 pips loss. And I love it. Love it. Okay? Because you got to think about it. If some of my losses are negative 33, and some of my losses are negative 50, and some are negative 3, and if not, at least half of them are negative 3, and every once in a while I get a negative 1, okay? So let's say I had 10 losers at negative 33, let's say 5 at negative 50, 10 at negative 3, and 3 at negative 1. Okay, you'd have to add that up, 10, 15, 25, 28. So let's make this 5, right? So out of 30 trades, of 30 losing trades, remember I consider negative 1, negative 3 losing. An amateur trader would take a 1 pip profit to prove how good they are as a trader because they have a high winning percentage. If you see that, you know they're amateur hour. Amateur. Just gross negligence on the basic understanding, which is pretty cool. So I say if I plan a trade, it should be worth 150 to 300 pips per trade. So if I don't get that, I need to record it as a loss, not as a victory. I made 2 pips. Victory! Like, dude, that's so stupid, right? What a loser. You count that as a winner? Then you must be a loser, right? So instead what you do is you add all that up and you'll see that it'll drop your average loser, let's say, to negative 21 or something. But if my average is 210 for a winner, check that out. Look at my risk-reward ratio, 10 to 1. What's my Sharpe ratio going to be like? Phenomenal. So I was short this kitty cat for a day or two. Got knocked out negative 1. Yeah. Awesome. Yeah. Because that's how you trade. Well, if you want to be an institutional trader, okay. Hey, Raymond, I keep wanting to visit you guys out in South Africa, and then with COVID and Omicron and everything, I'm like, dude, it's going to be forever. There's so many places I want to visit. I want to go back to South Africa for sure, but I'm like, dude, when's that going to happen, huh? When is that going to happen? Okay, so anyways, so I'm happy that I sold Japanese yen across the board yesterday. Yay! So I think that's it. I mean, I don't know. I'm tired, man. Tired. But I need to get you swing traders onto the new site. So go to the new site. Log in. If it rejects you, don't email me saying, I tried to log in and my password doesn't work. Retrieve your lost password and reset it. You should be fair. You should be taken care of. It should be fine. But don't wait. I think many people have gotten the emails but didn't act. And we're going to meet tonight. So I'm going to send you yet another email to say, dude, you need to log into the new site. And then maybe by next week, it'll be moved over to fxbootcamp.com proper. Which means your other web now, that right? So now that will be transitioned out. So you need to be transitioned in. Okay? Yeah, Oliver, there's quite a few new lessons. I'd say at least 13 hours because of the macro course. But I'm not sure the last time you signed up. So, right? So I don't know how much is new, but bare minimum 13 hours that I did earlier this year on macroeconomics. Okay. But if you bought the video training courses 2 or 3 years ago or 5 years ago and you want back in, I'm going to send you a ridiculous, a ridiculous offer that hopefully you can't refuse. It's just going to be stupid cheap. It's not going to be $500. It's not going to be $400 or $300 or $200, right? I'm going to send you an offer like, dude, come back in and take a look, go through it all again. Okay. Cool. So that's that. Any other questions before we go for the day? How can I join in when I bought it last year? Well, if you bought it last year, I sent you an email granting you access to the new site and asking you to log in. If you bought more than a year ago, a year and 1 day or more, then you'll have to wait for an email from me that gives you a ridiculous offer to come back. Okay. Then you might have expired on. No, I got you, Raymond. Yeah. Do you have your new Trader's Way account open yet? Make sure you get that done because I have Blue Sky pretty much ready right now. I just need to check all the seams and joints, and then I'll roll it out to you guys maybe next week. But that's the easy part. Yeah, right, Mickey. Wheatgrass for sure. But again, guys, if you're like scratching your head about your account or something, try to figure it out on your own or email me, Wayne at FX Bootcamp. All right, so I guess that's it. Well, thank you for being part of this community and being a subscriber here on YouTube. I try to give you value, try to give you education, a little bit of entertainment, but also sometimes just raw truth, man. There's a way to do this right and 1,000 ways to do it wrong. Okay. Oh, Raymond building a new rig? Oh, good. That'll make you a better trader. Yeah. Oh, yeah. That'll do it. That's going to be worth at least an extra 1% in a month. Right? Cool. Well, anyways, so I appreciate you guys in my life. You're good people. See you later.